From R.D. Smothers Wealth Management, this is The Retirement.
When you retire, if you want an exciting life, you need a boring investment strategy.
Matters.
If you enter into retirement without a plan for income, you're not retired, you're simply unemployed.
Podcast.
Hey, this is your host, Dale Smothers, and you're listening to the Retirement Matters Podcast. My hope is that you will find the information you need in every single show on how to do one of the three things: either saving more money more efficiently, planning better for your future where you can live in retirement worry-free, or my favorite, how you can live a happy and fulfilled life in this life you have been given. We know that your time is valuable, and we appreciate you spending it listening to this episode of the Retirement Matters Podcast. On this episode of the Retirement Matters Podcast, we do a deep dive into the Q3 GDP report that came out on September the 26th, 2024. I was recently on a TV show discussing this report, and on this TV show, we began to discuss the perfect recipe for layoffs, and that is simply a lowering GDP, which this report did not insinuate, but a lowering of GDP with a rise in inflation could cause a lot of turbulence in the market. Now, with that being said, I'm not here to predict that that takes place, but a lot of things are setting up for a pretty steep fall in the market if one thing falls. It's like a domino. One falls, they all fall. And what we want to do with our listeners is give them a way to build a retirement plan that's not contingent upon that, that's not depending on the stock market. And so in this episode, we go into a little bit of an educational segment where we're talking about what the GDP is and a little bit about how it can be affected. And in the last segment, we discuss how you can start to build a portfolio with what we call the risk-on, risk-off portfolio to live through retirement without fear and worry of running out of money, especially due to volatility. This risk-on, risk-off portfolio is a part of our overall plan where we build your retirement atlas that has 5 different roadmaps in retirement for income plan, your investment plan, your tax plan, your healthcare plan, and your legacy plan. Those 5 maps are important. You need those to get to where you're trying to go, and we walk with you along the way once we've built them. That's what we do here at RDS Wealth. If there's anything we can do to assist you, if you're listening to this podcast and you just enjoy listening to the show because of the education that you get or the entertainment, or even better, because it helps you perhaps live a little bit more optimistically due to our positive focus at the beginning, what we call the pause for positivity, any of those reasons, we'd love to hear from you, at least with a review and a share or a like or a mention, whatever platform you use. I would welcome the opportunity to discuss anything with you in person by reaching out to our office, 270-600-PLAN. And if you're just here to hear the show and not really worried about reviewing it, then why don't we just get to today's show? So without further ado, let's jump to this episode titled, What the GDP May Be Telling Us About Your Retirement Account. Enjoy the show. Good morning to you. I hope you are doing well and you are ready to start discussing all things retirement matters. We are going to jump into today's show, uncovering the latest news that's just came out about our GDP, about our jobless claims. We're going to unpack a little bit of the data that came out this week, telling you a little bit about what's going on in the market, of course, from a data perspective. But as always, my goal is to simplify the complex, and I'm going to bring it right down to where you are and what we need to be doing and what you need to be looking out for and concerned about in the market, and some potential opportunities in the marketplace we find ourselves in today. So before we get any farther into the show, let's jump into this positive focus, the pause for positivity section that I love doing each and every week. And this week, I just want to bring to you a news article that I saw. It's not going to be an extensive read, but it is this very unique situation that's going on. Apparently, a lady is who's been diagnosed with terminal cancer. She is auctioning off her last minutes, and she's doing this to strangers. It says a woman living with terminal cancer has auctioned off 3-minute slots of her precious remaining time in a profound living art exhibit, which is raising money and awareness for cancer research. This lady is 32 years old. She lives in Australia. She's given 9 months to live, and she is being diagnosed with a rare form of aggressive cancer. She was diagnosed in 2019, and she is hopefully raising money for cancer awareness and potentially seeking to gain access to this cutting-edge treatment in the USA, which is not available in Australia. Now, this is an extraordinary story to read. I'll tell you where I found it. Give me just a second. I'll share with you here. Believe it or not, this is on positive.news website, which is interesting. I didn't realize that I had landed on that. That fits this perfectly. This is the positive focus. So I do read some articles from time to time, and I seek out positive insight on the world, whether it be the economy or just human beings in general, because there's far too much negativity out there. And this one comes to us from positive.news. It's www.positive.news. Pretty neat little resource for you. And again, this particular article talking about a lady who is auctioning off her last remaining minutes of her life in an effort, of course, to raise awareness and money for cancer research. Now, granted, she cannot actually auction off any of her own time, and the ones who buy that time do not actually gain 3 minutes of their life. It's very easy to understand that, and I think it goes without saying that that's not actually what happens. But this does make you think. It makes you think about how valuable time is. This lady has been told she has 9 months to live, but the reality of the matter is she could walk out tomorrow and be hit by a bus. You could walk out tomorrow and be hit by a bus. I could not wake up due to some sort of terminal illness that was undiagnosed altogether, or I could not wake up in the morning and my family find me in the bed non-responsive. This type of reality allows us to realize how valuable time actually is. She goes on to say in the article, it's time to live, be present, make it count, because we can't buy any more of it. She's talking about time. She said it's time to live, be present, and make it count, because we can't buy any more of it. She said it can't be saved, and when it's gone, it's gone. This is the positive focus for the day. This is our pause for positivity. Too much negative stuff going on out there. We don't have enough time in this world to concern ourselves with so much negativity. You have things going on in your life that need your attention because they are a priority. Maybe they're people. Maybe they're situations. Maybe they're places that you need to be. But the last thing you should be doing, the last thing I should be doing, is wasting such a valuable resource, our time and our attention, on things that do not matter. At the end of the day, you know who you're going to vote for. Why in the world do we continue to pour negativity into our minds? At the end of the day, you know that the market's going to go up and down. Why in the world do we worry ourselves with all the market movement that's taken place? You know that there is war in the Middle East. There always has been, and there always will be, until the Lord comes back to settle it all once and for all. So why then do we consume our day with negativity? You know that someone is going to upset you because they're human beings, because you too have upset people. So why not extend some grace? There's not enough time in the day. And we'll just take it from this lady. We'll end on this statement. Again, this young lady named Emily from Australia, she is auctioning off time. It's a theoretical experiment, but she's auctioning off time in 3-minute blocks to people who will buy this time. And it's an example of showing time cannot be bought, it cannot be saved, and it is impossible to put a value on. She says these words, it's time to live, Be present and make it count, because it can't be bought, it can't be saved, and when it's gone, it's gone. I will tell you what my dad has taught me from a young age when I was able to conceptualize this statement. He says, time, unlike money, when you spend it, you never get it back. This is a powerful statement, and this exercise of auctioning off time makes us realize not only do we not get any of it back, but if we could, it would be impossible to purchase because no one would be willing to sell it. Don't give yours away. That's our positive focus. Don't give it away to people, places, things, or ideas that are not worthy of it. Let's stop there. Let's go to a break. We're going to reset. We're going to come back with some information. We're jumping into the GDP, the gross domestic product, what it is, how it impacts your retirement, and ultimately your day-to-day life. Don't go anywhere. We're coming right back with more Retirement Matters after this.
Thank you for listening to Retirement Matters, presented by R.D. Smothers Wealth Management. We help folks just like you retire the way they desire and live happy in retirement. If you'd like to speak with us, maybe even just ask some questions, give us a call at 270-600-PLAN. That's 270-600-PLAN. And if you enjoy the information in this show and would like to hear more, you can access previous shows by searching for the Retirement Matters Podcast on the podcast platform of your choice. That's the Retirement Matters Podcast, available to you 24/7 wherever you listen to podcasts. We also produce a weekly newsletter. Receive it free to your email inbox by signing up online at rdswealth.com. That's rdswealth.com to sign up for our free weekly newsletter. Our phone number once again, 270-600-PLAN, and online at rdswealth.com. Be sure to sign up for our free weekly newsletter.
All right, welcome back to the show. Let's jump into a report that came out just recently. This is the GDP report. It's the gross domestic product of the United States. Now, if you're not familiar with what the GDP is, let me give you a very high-level overview of what it is and why it matters. The GDP is essentially the number that we use to measure the size of the economy. And sometimes it's easier to consider it from a small business perspective, and it would be the total value of all of the goods and services that you produced in a specific year, the value of that you have produced for an individual. And there are different ways to measure that, of course, but you've got to add up all of the cost that you had, and all of that goes into your value that you have produced over the course of a year. This is what the GDP is, the gross domestic product. Now, the GDP right now is our last measurement, at least for 2023, which is our last real numbers to go on, was $25.4 trillion with a T. Now, we've talked about trillions before. They're hard to wrap your mind around. So when you put it in the perspective of time, 1 billion seconds is 31 years. 1 trillion with a T seconds is 31,000 years, 31,688 to be exact. And this is the gross domestic product of $25.4 trillion is what America produces. It is by far the largest economy in the world. Now, China is trending closer to us every year, but we're still the biggest. We produce more value for the world than any other country in the world. However, we have one of the largest debts in the world as well. It's kind of like perhaps your neighbor that you may be in danger of or guilty of trying to keep up with. And yeah, they got a big house, they got a big car, they have a lot of really cool toys, but their credit card bills are out of control. Well, we're that neighbor. The United States is that neighbor. And it's unfortunate because our debt to GDP, which is the debt that we have compared to the GDP, the gross domestic product, that is also measured And right now it's 123%. Our debt is 123% of what our income is, if we want to put it in layman's terms. This is the type of perspective you must have when we're looking at the overall economy. Now, there are many people who say that's not to be fearful of. Our economy is growing. We are in this race for artificial intelligence, and that too will raise the GDP. We will produce more things. We will bring more value, and we are a service economy now. So we are importing things that we once exported, and that's good because it makes us a mature economy. You know, there are theories and theses around that, and we could argue that. I'd be happy to do that with the right person. But for the scope of this radio show, I just want you to understand what the GDP is. And then I want you to understand that the GDP comes out once a quarter with an estimate. The United States estimates how much we are growing, and every quarter they change that estimate until the end of the year when the final number comes out. And then finally they tell us the GDP grew by X numbers of percent or X number of dollars, depending on which report you're reading. And from there, we know if the economy is growing or it's shrinking. If it's growing, that's good. If it's shrinking, we are in recession. Now, a recession is a part of a normal economy. Recessions happen, and they're not altogether bad, as long as they're not frequent or lengthy. It's very similar to getting a cold. If you never had a cold, well, the first time you get a cold, if you've never had a cold and you're 50 years old and you all of a sudden get a cold, it's going to be one of the worst colds you've had in a long time, and it may kill you because you've not built what we call the normal flora. And for those biology buffs out there, you know exactly what I'm talking about. This layer of bacteria that is supposed to protect us. When we're children and we're eating dirt, we are building the normal flora. We are building our immune system. When we go through micro recessions in the economy, we are building resiliency. We are making our people stronger. Our GDP typically comes back stronger. But the prolonged type recessions, 2008 rings a bell, 2000 or 1987, those types of recessions are not good for anyone. And eventually, recessions have a way to make the debt worse if the wrong person is at the wheel. Now, I'm going to move away from that statement because I don't want to debate who should or shouldn't be at the wheel, but I do want to tell you that whoever comes to the wheel after this election cycle is behind us, they have some decisions to make. And as you can imagine, those decisions are going to shape the country for the next decade or two as we go into the future. Our GDP needs to continue growing, and it's growing at around 3% right now, according to the latest numbers that we're looking at. This 3%, it's kind of like the law of large numbers. It's hard to grow larger numbers by larger percentages. But 3% is not as good as we need it to be when we are spending money like we are spending it. 3% consistent growth and taxes being cut and spending being out of control can only spell one thing. And this is I've been dangling you on the edge here, building it up to this one statement. We need to prepare for higher taxes in retirement. We need to prepare for a day of reckoning, whether it be in the market with unrealized capital gains being taxed, or it be on the backs of those who earn income with higher income taxes. We need to expect taxes to increase. Now, one side and the other side are promising tax cuts. It's almost as if we're watching someone run for the class president, and they say recess all day. And then the next one comes out right behind them and says, yeah, I'll give you recess all day, and the juice boxes are free. This is a problem because no one seems to be paying attention to how our country is spending money. No one seems to be paying attention to these promises that we've made to retirees and Social Security and pensions, these promises that we've made to Medicare recipients, and we aren't able to fulfill our promises if we continue to cut taxes. unless it instantly grows the GDP. There is a camp in which taxes being cut for specific institutions or specific businesses could very easily make all of those businesses move back to the United States. And now, boom, we have a major growth in the GDP. That's possible. That is certainly possible. But it needs to happen quick. And this is what I want to tell you. We tell you every single week, you must begin to detach your success in retirement from the success of the stock market. And if you are dependent upon continued growth as we've seen over the last 5 to 10 years, and hopefully everything works out, Dale, I've got a plan for retirement. It's called a 401k. If that's where you are and you're over the age of 59 and a half and you're about to retire within the next 5 years, we need to speak. Because I'm not here to tell you whether the market's going up or down in a given year. I'm not going to play that game because it is a loser's game. I have my opinions, I have my theories, and I can certainly show you the best places to invest in either of those two directions. But here's what I do know. I do know that it is possible that when you enter into retirement, you can be successful whether the market is up or the market is down. You can't do it solely by depending on growth strategies. You must transition into income phase, both in your portfolio and in your mentality. We help clients do that. We sit down with you. We discuss things that are going to impact your retirement, like taxes, long-term care, Social Security claiming, potential Social Security cuts, these types of retirement account volatilities that we see in the market where the ups and downs take money away from you. We help people make sure that doesn't happen to them, helping you insure against the loss of your farm or your house in the event that long-term care comes knocking on the door. This is the type of thing that we do with clients every day, and we would love an opportunity to work with you. If something that we have said about the GDP makes you worried and you don't have a plan, or if something about the overall economy right now has you a little bit fearful and you don't have someone you can talk to that you feel like is giving you actual planning advice, and let me be very clear here, talking to you and saying, don't worry, it's going to be okay. Don't worry, the market always bounces back. That's not planning advice. Planning advice is, let's sit down and look at the numbers and see what's best. Planning advice is, hey, I understand your fears and your worries, but do you remember inside of the plan, this is what's going to happen if the market takes a 20% nosedive? Do you remember inside of the plan, this is what's going to happen if you or your spouse end up needing nursing home care? Do you remember in the plan that this is when we're going to take Social Security? And if it is cut by 25%, you're still going to be okay because we're going to get money from this source or that source. That's planning. And if you don't have somebody that can do that with you, we'd be happy to sit down and talk with you. 270-600-PLAN. Our team is ready and able to discuss the details of the market or just the high-level overview and understanding that, hey, you're going to be okay. And we're going to make sure that we're here with you every step of the way to make it a reality. So here is my commitment to you. I want to open up our team's calendar, free of charge, no cost, 15-minute phone consultation with someone on the team if you would like to discuss a few things specifically pertaining to your account. 15-minute phone calls. We'd love to have those just to see if it's even worth sitting down together over a cup of coffee. If you want to come directly into the office, of course, when you call into the office, let Miss Beth or Miss Brooke or Miss Hattie know, and they will get you to the right person on the team to address your concerns directly. Now, I'm going to go to a quick break and we're going to reset. I'm coming back with a couple of things you can do if you are looking to build something on your own, or maybe you're already working with an advisor and you say, Dale, I don't really want to employ your team to assist me. I've already got a plan. Here's a couple things that you may want to consider as we go into this period of potential turbulence that will face us within the next, let's say, 2 to 3 years. I'll put it out that far. And I'm almost confident that it happens at some point between now and then. When it does, be ready. We're going to show you how right after this.
It's 4th and 1 with 2 seconds left in the game. Less than 1 yard separates you from victory. You have the best running back in the league, but your coach calls a Hail Mary.
As silly as that sounds, we see a lot of retirement managers being far too aggressive with your investments when a more conservative play would be a better fit. You have questions, we have answers.
Contact R.D. Smothers Wealth Management, 270-600-PLAN. That's 270-600-7526.
All right, welcome back to the show. I've got just a few minutes. It's unbelievable how quick this time goes. I enjoy spending it with you. I do want to very quickly hit on one more thing about the GDP. Like I said, it grew, or it's going to, by all expectations, grow 3% this year. That's not a bad thing. I don't at all want to shine a light on that. That is a bad thing. But what I am concerned with is the fact that we see consumer sentiment at all-time high. This consumer confidence report that measures the consumer's expectations of inflation and stock prices and interest rates and all the things of the market, it's trending in the wrong direction. And we can read this. It's all over the news. Any report that you read shows consumer sentiment is at low points. It's not at all-time lows, but it has certainly been higher, and it continues to trend downward with every revision. And this is where I think we could see some sort of self-fulfilling prophecy. One bad report, one bad GDP, one bad economic report, like let's say the labor statistics or the employment statistics, or even something like the strike that's about to take place with the port workers, causing inflation to spike a little bit higher, which you have heard my thoughts on that if you've listened to the show. This type of report could make things ignite all again. With inflation reemerging and let's say a bad GDP report, that is the perfect recipe for layoffs. And guess what happens when layoffs start happening? Everyone stops spending. And when everyone stops spending, we put ourselves in an even greater recession. It's a downward spiral from there. And unfortunately, according to Keynesian economic theory, one of the ways to get out is to spend more. And spending more with lower GDP, it just doesn't look good. It doesn't look good for perhaps a decade. And so here's my question to you. If things happen to not look good for 10 years, can you survive in retirement? Or even better, if you are planning on retiring in, let's say, 2027, and in 2025, the market takes a 20% nosedive and stays down from there, and let's imagine it takes 6 or 7 years to climb back out of something like that, can you survive retirement? Would you still retire? And if the answer to that is no, or I'm just not sure, you need to talk to a retirement specialist. We're here to help. 270-600-PLAN. You've got to make sure that volatility will not cripple your plan, because any type of imperfect number that comes out in the market right now is going to be reacted to very negatively based off of what we're seeing at this moment. This is where we talk about strategies like the risk-on, risk-off portfolio. This is a trademarked portfolio that we use in our firm. We have trademarked this risk-on, risk-off portfolio as a way to balance portfolio volatility. It is money that belongs in risky investments and money that belongs in non-risky or low-risk investments. Everything you do has risk. Walking down the road has a risk. Getting in your car has a risk. But there are levels of risk that we're okay taking. And if we can understand what that is as a firm, if our team can help understand exactly what level of risk you're okay taking, then we can build the portfolio together using this risk-on, risk-off analysis, and we can help you live through a downturned market and not impact your retirement. This is what we do with clients every day. The risk-on, risk-off portfolio is going to give you an opportunity in down markets to still spend the money you desire, and in up markets to spend every bit of the money you desire. No matter what the market does, you can spend the money that you desire if the plan is built correctly. And you can do it without having to worry about running out of money. Now, Dale, how can you do this? Well, we're going to employ things inside of that risk-off portfolio that lower your risk. What are those things, Dale? I hear you asking, what can we do? Take a look at stocks or ETFs like POCT. This particular ETF gives you upside potential in the S&P 500. If I'm not mistaken, it's up to 11 or 12% of the upside of the market, but it protects you against the first 15% downside. And what that means very quickly is that you have downside protection against market losses, and you still participate in a lot of the upside of the market. This is what we're talking about by lowering your risk. And if we can achieve your objectives without taking any unnecessary risk, now is the time. All right, that's today's show. It has been a pleasure getting to chat with you today about what's going on in the market. We've covered GDP, we've covered what it means and how we can guard against some sort of downturn in the market if that were to be the case anytime soon. But I want to come full circle and go all the way back to our positive focus that we hit at the beginning of the show, which is where we talked about time. The most important thing you have is your time. And what we want to do here at RDS Wealth is we want to assist you in regaining that time. Stop worrying about the stock market. Stop worrying about what's going on with your money or all the uncertainties of retirement. Put those worries on us, and we will assist you in getting to where you want to go as efficiently as possible. We would love an opportunity to sit down with you, and it's as simple as giving our team a call at 270-600-PLAN. Now, we would love an opportunity to sit down with you, but whether we talk in person ever or it's always right here on this show, I want you to remember one message, and that is save money, plan well, and live happy in retirement. God bless.
Investment advisory services made available through AE Wealth Management, LLC. AE Wealth Management and RD Smothers Wealth Management are not affiliated companies. Investing involves a risk, including the potential loss of principal. Any references to protection, safety, or lifetime income generally refer to fixed insurance products, never securities or investments. Insurance guarantees are backed by the financial strength and claims paying abilities of the issuing carrier. This radio show is intended for informational purposes only. It is not intended to be used as the sole basis for financial decisions, nor should it be construed as advice designed to meet the particular needs of an individual situation. RD Smothers Wealth Management is not permitted to offer, and no statement made during this show shall constitute tax or legal advice. Our firm is not affiliated with or endorsed by the U.S. government or any governmental agency. The information and opinions contained herein provided by third parties have been obtained from sources believed to be reliable, but accuracy and completeness cannot be guaranteed by RD Smothers Wealth Management.